shouldn't be all the time. You don't get like fine, emergency can happen once in a while, but not all the time.
Nah, if èmi ni wọ́n ṣe fún mi àbí ti
Good morning, distinguished members of our society. I want to welcome every one of us to this webinar. This webinar is put together by uh, a club referred to as a Joint Mind Club, and we refer to it as Joint Mind International. Within the next 2-3 minutes, I shall be telling us more about those people behind this webinar. We Hope that every one of us will enjoy this webinar. Stay tuned as I bring on board those that shall be piloting this affair within the next few minutes. We will tell you more about this webinar, but permit me to quickly introduce one of the panelists who shall be doing justice to this webinar today, and is no other person than Mr. Akimbiyi Abudu. Mr. Akimbiyi Abudu holds MSc and CPA, and he has a lot of years of experience regarding taxation and accounting. Put together, his years of experience is not less than 20 years in consulting and industry experience in global structuring and corporate finance functions. Before he joined Ernst & Young in 2011, Akimbiyi has gained a lot of extensive experience in tax in various companies. His area of expertise is that of income tax and compliance, especially anything that has to do with tax planning. He has successfully applied his experience in a wide range of endeavor in accountancy and taxation profession. So please welcome with me, Mr. Akimbiyi. For the purpose of this webinar, I shall refer to him as Akimbiyi. I hope you find him useful for this particular discourse today. The next person I shall be introducing is also one of my bosses. His name is Aziz Alatoye. Aziz Alatoye is a chartered accountant and fellow of our Dear Institute of Chartered Accountants of Nigeria. He's also a fellow of Chartered of Taxation of Nigeria, and he has done extensively in the area of law, management, and he holds Bachelor of Law degree, and he has successfully attended. Alatoye is the senior partner of Ascension Consulting Services. He has the possibility of ensuring that development and operational aspect of the firm is ensured. He is a barrister and solicitor of the Supreme Court of Nigeria and a member of the Nigerian Bar Association. You will agree with me that as a fellow of the Institute, it is not by trial and error. He is also, like I said the other time, fellow of CITN. He has held various positions in terms of taxation in CITN. One, he was the Dean of Oil and Gas and Mineral of the Faculty of CITN. Aziz Alatoye can be referred to as a thorough leader, especially in tax compliance and an investment tax friendly environment. He has been able to prove himself in this area of endeavor. Please welcome with me Aziz Alatoye. And for the purpose of this webinar, I shall be referred to him as Alatoye because I'll be more comfortable with that. Yes, I'd like to also, within the next few seconds, introduce the brain behind Joint Mind International Club, a club that we can refer to as club that has been able to bring some of us together, that has been able to shape our mind and our professionalism in terms of accountancy and related field. The man behind Joint Mind Club, and the club is by this year 30 years old. I'm talking about no other person than Abiola Tobi. Abiola Tobi is the holder of HND in accountancy, BSc in accounting. He's a fellow of our Dear Institute, that is Institute of Chartered Accountants of Nigeria, and our Dear Institute, Chartered of Taxation of Nigeria. Tobi Abiola currently is the lead doyen and chairman of Joint Mind International Council, and is a member of ICANN Governing Council, and currently he works with Federal Land Revenue Service, and he is a deputy director in that particular organization of importance in Nigeria. To set the ball rolling, in no particular order, we have two invited panelists that will join us, and we will be calling on Lidoyen to quickly talk to us on one or two things that he wants to talk about before we call the panelists to tell us. Thank you. Lidoyen, please.
Thank you very much, Godwin. It's a pleasure having the first Join Minds webinar. It's not been easy. It's our first time, but we hope that we have so much more in the future. Thank God to COVID-19 that innovations that are coming out from COVID. Also, I want to tell our panelists that we appreciate them for having time to come for this program. And also to our guests that will listen all around the world. We want to say that more to come. Just stay with Join Minds because there's a future. We'll do our best to make sure that accountancy and taxation is a pilot to national development. Thank you, Godwin. Have a blessed day. Thank you. Hello, Godwin.
I can hear you, sir. I can hear you, sir. You are welcome, sir.
Okay, thank you.
Please, you can speak, sir.
Pardon?
You can speak now.
Okay.
He has finished. He has finished.
Thank you, Godwin, for this time. Thank you, our panelists, for having time to be with us. Thank you, Alatoye. Thank you, Akibiyi. Thank you, everyone hooking up to Join Minds webinar all around the world. You will enjoy it because they are eminent people. Stay with us for more in the future. God bless you all. Thank you.
The leader of Joint Mind International. Now we will not waste any time and we just move without any other protocol now. Actually, the topic of this webinar is well known to you. What can you tell us within the next 10, 20 minutes about this? Feel free to talk to us.
Yes, good morning, everyone. Hopefully you can hear me clearly. All right, great. Thank you again. Thank you for inviting me. It's a pleasure and a privilege to be here. It's obviously a very topical discussion today in terms of COVID-19. And as accountants and tax practitioners, we're focusing today on some of the tax solutions that we can look forward to or think about in this kind of situation that we're in. So just to step back a little bit and just to give some context. So as you know, with the COVID-19 situation, there's been lockdown globally. So that has affected not only from a health crisis, but economic crisis as well. And when you think of government is just like any other business that needs, that has expenses, has budget, and also needs revenue to meet those budgets. So when we move down to Nigeria, is specifically hit, just like any of the other oil producing companies. So it's a double whammy. So on the one hand, you have the slowdown in the economy, but then also you have the fact that not even before the COVID-19 fully hit, the oil prices had significantly dropped, and it's dropped even further with the slowdown in demand for oil globally. So the government is hit pretty bad. So obviously they are looking to see how to rebound, get some revenue, which then they can hopefully in some way pass on some stimulus to companies to help bring us all out of this. So I think based on COVID-19, the government has actually, notwithstanding the issue that they have in terms of revenue, they've issued some tax reliefs. So I'll just quickly touch on a few of them. The most major one is still, it's not yet passed, is the emergency economic stimulus bill. It has three primary things that it's included there. The first one is deferment of mortgage payments to loans to the National Housing Fund. And then there's also waiver of import duty on importation of medical supplies and medical necessities. And the third one, and a really big one, is a 50% rebate on income tax payable by companies, as long as they don't lay off any employees. So now that hasn't passed yet. So that's something that's in the works. We don't know if it will pass, particularly now that lockdown is easing, and my earlier comment as to the government needing funds as well. Now, what has passed and what law are things primarily based on deferment. So deferment or making payments or filing returns. I won't most of it, but it's withholding tax. Now you can file a bit later. Tax return you can file later as long as you make your payments. Then there's also deferment of interest and penalties that was recently issued. Now it becomes very clear quickly that more so mere deferments and not really abatements, and they're not significant tax reliefs that has been issued. So what are businesses supposed to do? So my advice, and I think what's really important for businesses, is to tighten our belts. Just like companies, people, governments, businesses also have to tighten their belts. And there's no bigger way to tighten your belt by to look at your taxes, your effective tax rate, the amount of taxes you're paying. And that's something what businesses need to do. And what we need to do then is go into, because there are no new provisions and no significant new provisions. So you need to go into the existing provisions that are there and ensure that you're taking advantage of all the tax incentives that are available to companies right now. And then also start thinking about tax planning. I think you mentioned earlier, one of the things I noticed when I joined EY in 2011, when I first moved back to Nigeria, that a lot of companies did not have robust tax functions, and some of them didn't even have tax directors. So tax was looked at purely from a compliance perspective. And to me, that I found that quite strange, given the 30% effective statutory tax rate, and the fact that if you're not careful, you can pay a lot more than 30%. Your effective tax rate could be 50 or 60%. If you have a lot of taxes that are being disallowed and a very inefficient structure. So I think now companies can afford to be laid back in that regard. And we don't know exactly how long this economic situation would last, even if the is eased. So one of the things I would advise companies to do is really start looking at incentives. For instance, if you're a company in a particular sector or in a particular industry, you may be eligible for pioneer status, particularly if you just started operations within the last year or two. So those are pioneer status. There's, if you're in the gas industry, there's gas utilization incentive. If you do a lot of exports, there's export grant, which you can actually use as to offset some of your imports in terms of import duties, and also actually use to offset some of your CIT duties, which you just made recently. And those are some of the other types of customs grants and whatnot if you're in the import-export business that you can look at. Then another thing very important, refunds. A lot of companies don't realize, or they do realize, but they don't go for refunds. So when you overpaid VAT, or you're in a, you can offset such that you're in a refund position. This may be a very good time to start chasing those types of opportunities to get your VAT refunds in, and those are actually cash that comes into your hands. The same thing with withholding tax credits. So if you're in an excess withholding tax position, then this would be a good time to start chasing some of those things and get your withholding tax refund. Government actually, they do pay cash, and they probably will do an audit, but if you're found to actually be due for that refund, you will get your refund. Then there is the potential on a case-by-case basis to actually engage with the government, the FIRS, to see about getting some additional concessions, whether it's paying taxes or filing, aside from that that's been provided by the government already. So those are some of the things that I would say easy things that are right there, the low-hanging fruits that companies should be thinking about immediately. Now, there's some more, I would call more complex things that you probably want to think about, which I would put under the category of tax planning. For those, this might be a good time to do some kind of business reorganization, some restructurings. Particularly in Nigeria, we have a lot of transaction taxes. What I found very common is in Nigeria is companies, for every business that a company is doing, they set up a new entity. And sometimes they have transactions between these multiple entities. And then you have VAT, withholding tax, and a lot of other transaction taxes that would apply. So this might be a good time to reevaluate or structure and say, listen, do I really need this amount of entities? Can I merge some of those entities together and restructure in a better way? That would help reduce some of those transaction taxes. Then there's transfer pricing. I know a lot of people have heard about transfer pricing, particularly in the last couple of years. So transfer price is also very important, particularly for companies that have inbound transactions or even outbound. So as I said in the beginning, this is a global strategy. So companies, for instance, if you're a distributor here in Nigeria and you're used to earning 5% margin or 10% margin, but your supplier or manufacturer is going through a very tough time right now. So it might not be, as part of transfer pricing, we do what's called an industry analysis. So this industry right now could be suffering such that we may need to justify a lower transfer pricing rate. So this is something that definitely should be looked at to ensure that you're taking all of those into account at this very important time. So transfer pricing could be another way to kind of help fix and help you with your cash flow and profitability at this point, a reduction of tax. The last one, which is extremely, well, not extremely, but really, which is the most complex, is really looking at your effective tax rate. Your effective tax rate essentially is you have the statutory tax rate, which is 30%. If you add education tax, 32%. Your effective tax rate just calculates how much taxes are you actually paying on your profit. So it takes the total tax expense and compares that with your profit before tax. So this is the time to look at that and say, really, how much taxes am I paying? Am I ensuring my effective tax rate is as low as possible? And one of the ways is to structure to look at some form, particularly what other countries are doing, other companies in other jurisdictions. We need to start stepping up to those type of structures where we're working and we're operating in a multi-jurisdictional space and not just in Nigeria, particularly with Africa coming in, where Nigeria is going to be, Africa will be looked upon almost like you have the euro, for instance. So it's going to be almost like one country. So we need to start thinking about effective supply chain management, putting different elements of your supply chain in different jurisdictions. It's complex, and it may not be for all companies, but for some companies that are starting to think about going outbound, for instance, you can start thinking about that, having your IP and R&D function in some jurisdiction, having manufacturing in another jurisdiction, and having distribution in a separate jurisdiction, such that as a whole, your effective tax rate, when you think about it, doing some rate arbitrage, it would be at an optimum level, okay? And in terms of, I mentioned effective tax rate could be really high. One of the major reasons for that is not having your deductions permitted. And I think when we look at tax deduction, we need to understand there are two types of non-deductible items. There are things that are just not deductible, and there are things that are deductible subject to having the right documentation. So at this point, we need to make sure on that category of things that are deductible subject to documentation that you have the right documentation in place. So you're not just losing those deductions, and make sure you classify those. So you want to go away from just other categories, things non-descriptive categories for your expenses as much as possible, so you can get those deductions and reduce your tax liability at this point. So I'll just summarize. I was only given about 20 minutes. So essentially, just to summarize, understand the government is in the same position as businesses, as all of us are. They are also looking for funds. They've provided some incentives, but most of them are mere deferment and in terms of tax administration and ease in terms of tax administration. So essentially, there are some incentives there. You need to make sure you can take advantage of those if you can. But more so, you need to look at the existing laws and our efficiency in our tax operations at this point. Thank you very much, and I'll be available for questions later.
Sure. Thank you, Akinbi. We want to say thank you once again. However, before you are allowed to rest, I want to ask you this question, and you can take it for like 2 or 3 minutes more. What do you expect based on your discussion? What do you expect tax professionals to start thinking about, and how do you think they can be more rendering a kind of value added service to their clients this period of time? Can you hear me?
Yes, I can hear you. I think that's a great question. For us at EY, what we coined the term client centricity. So at this point, you need to be focused not on what solutions you can take to the client, but really how can you help that client? I think that's what, as tax professionals, what we should be focused on right now is talking to our clients, understanding their needs, as opposed to us going to the clients with solutions and what we think. So I think that's a short version of, short summary of what I would say we should be focused on right now. Thank you.
Okay, you can't just say thank you and go. I still want to do a kind of follow-up question now, because I know Alato is loaded also and is ready to talk, but you should just relax. It will get to you, my boss. This period we have, majority of our participants here, they are wondering, how can we service our clients better this period? Look at this, because this webinar is about tax solution. And one of the problems I'm envisaging is this issue of rule of filing of returns. 6 months after the end of your accounting year, majority of companies will be looking at June ending in order to escape this exposure. What is in your mind can we do to ensure that tax return is filed as and when due?
All right, thank you for that. And I'll expand your question a little bit to also talk about tax audits. But in terms of filing, this is what we've been doing as a firm, is we started very early engaging the FIRS and letting them know, listen, we have clients that want to file, and we just want to make sure there are ways to do this on a remotely, as opposed to the old ways of filing and taking the printed copy to the office and whatnot. And they were very responsive, and they were starting to, we could send the returns online, we would email it to them. And also one of the incentives that they issued was, even if you don't have your audited financial statements, you can file based on management accounts, even for transfer pricing purposes. So the FIRS is very open to working with taxpayers in this regard. The other part, and I said I was going to expand your question, is in terms of tax audits. So generally speaking, companies do not want to go through tax audits. So if they see an opportunity to postpone an audit, is usually something that they're happy about. But I think this is the wrong strategy for this period. In this period, I think the FI is actually a lot more open to negotiating and closing out audits as fast as possible. Because like I indicated in the beginning, they themselves also need the money. And also the issue of the fact that if you settle your payments in an audit, there's not going to be any penalties or interest. So I think in a nutshell, what I would advise companies is better to engage than not engage. It's better to engage in terms of filings, in terms of audits, engage the FRS, you find a friendly ear on the other side. And I think that's what I would say on that.
Honestly, I'm not allowing you to go now, but I want to say thank you for what you have done. But permit me to ask this question, especially the one from Sulaiman, is asking that FRS said there's going to be a kind of palliative in form of payee, and he wanted to know and say who is the beneficiary, the employer or the employee. So have you factored this in your thinking in putting your advice together? If FRS goes ahead and gives palliative, who is the beneficiary? Is a very technical one. Can you just do that and I will allow you to rest, sir?
Yeah, no problem, no problem. I kind of alluded to it at the beginning of the of my presentation. So actually, I think both parties, both the employer and the employee, are benefiting. One from a tax perspective, which is the employer. It's actually a benefit for the employer, but it's based on them not laying off their employees. So essentially, both parties are benefiting. So the employer gets a tax benefit, but the employee gets a job security benefit. So that's, I think it's kind of a smart play by the authorities, but it's still a bill. It hasn't passed yet. I'm not sure it will pass now that the lockdown has been eased. I'm not sure if that bill is still going to go through. I don't know. It's up in the air. It's past its third reading though, but so we're still waiting. Thank you. Sorry, I can't, it's freezing.
Prof, you are on, Prof. Hello.
Thank you. Sorry about that, Akibi. It's been a wonderful time. Okay, so please stay tuned. You are not going anywhere until you are told to do so.
Okay, no problem.
Let me go to my boss, Aziz. Wonderfully, I've listened to you quite a lot of time, and I always want to be in class. You've heard from Akibi, and I know you have your mind. Please, within the next 25 minutes, can you just tell this honorable gathering what you think would be task solution at this period of time?
Prof, I first want to disagree that a student will be teaching prof in classes. That is the first disagreement I will have with you with utmost respect. And the second challenge I have is when you bring somebody from the global to first speak, and then he had already touched all the topics that I have prepared. I was just ticking them. So at the end of the day, I'm just wondering, you know, having said that, it is my very great pleasure to join, you know, this webinar. And let me actually thank Joint Minds International and our council member, Mr. Toby Abiola, for considering me and us for this program. I think it's a very useful program. Now, BE had actually touched on almost all issues that we need to avert our minds to. However, I'm just going to compartmentalize them, you know, because the first thing is for us to agree that this COVID-19 pandemic is a reality, and it has touched countries, it has touched businesses, and now what we need to look at in this discussion for a very short period of time is to focus on tax solutions. And in focusing on tax solutions, I will just be discussing around 5 areas, just to put what he had said in context. And please pardon me if I had to repeat some of the things he had earlier said. But the direction I want to go is actually to compartmentalize, you know, those points from the perspective of stakeholders. And the first thing is for me to look at the executive pragmatism. And when I say executive pragmatism, I mean the Federal Ministry of Finance, Ministry for Technology, and all the various ministries. We need to look at what do they need to do differently, especially from tax management perspective, such that after this COVID-19, Nigeria will come out of it stronger and differently. Now, the second thing I want to look at is the legislative dynamism. Here I talk about a number of palliatives, which we will see there are public, circulars issued by the Federal Inland Revenue Service, by the Lagos State Internal Revenue Service, by some other tax authorities that we are granting you palliatives. We need to look at the legislative issues around some of these things so that by next year or thereabout, or anytime the COVID-19 is over, we don't turn back now that, okay, we are fine now. Sorry, all those incentives we granted you or the palliatives, we have to have a second look at them because they do not have legal backing. So I will be focusing on legislative dynamism of both the National Assembly and then the various state assemblies. Because in all fairness to the tax authorities, they've done what is right at this time. However, if there is no legal backing, when the whole thing subdue, the tendency of we coming back and say, I'm sorry, it was then, but now we can see very clearly COVID has gone, COVID is nowhere here. You must pay this penalty, you must pay, this interest. So that legislative dynamism is something I also want to put in context. And the third thing is actually how the judiciary can also help and use taxation to stimulate our economy. Because we have a long list of cases, in court. And we need to look at things differently, in my honest view, this time around, in the sense that the court has always encouraged out-of-court settlements. However, this is the time that we need to do more of that. So what is the role of legislative in stimulating the economy by making resources available to the government? Because if we say government should not, be relying on borrowing at this time because of the interest challenge you still pay on the long run, we must be able to find solution to how government is, going to get revenue. So that's the third, focus of my discussion. And the fourth one is actually the taxpayers' increased compliance. And why do I have to focus on taxpayers' increased compliance? I don't think it's going to be a good thing that somebody is taking a step to incur penalty and interest, in this COVID-19 era. So, or even thereafter. I think the idea is to move away from paying penalties and interest, and by paying very quickly and rightly, to the government. I honestly believe that the cost of compliance is actually far cheaper than the cost of non-compliance. So this is with respect to the taxpayers. And there are also a lot of things that taxpayers need to do, at this time that we need to look at. And finally, is the role of the tax professionals. We as tax professionals, how do we, stimulate or grow our practices, after this COVID-19, both during and after COVID-19, because most of our practices are traditional practices, like physically going to the tax office and so on and so forth. How do we move our tax practice from the traditional practice to a fintech, tax practice? Now, from the comfort of our homes, we are filing returns, we are having meetings, and everything is going. We are raising invoices, we are billing without any physical contact. So how do we benefit, on all this going forward? So my focus really is how can we use taxation to really stimulate each stakeholder's roles, going forward post COVID-19. So these are the things that I actually want to talk, around by way of introduction. So if I pick the first one, which is the role of the executives, what exactly are we looking at that the executives need to do? When I say executive, I will be expecting ministries like Ministry of Finance to take a lead in documenting those things that is going to help the government, out of these challenges. And I will be a bit specific. Supporting the Ministry of Finance very strongly is the Federal Inland Revenue Service. And of course, because the chairman of the Federal Inland Revenue Service is also the chairman of the Joint Tax Board, I expect a lot to be done at this period for our tax development to stimulate the economy. Because if we are able to get economy right, I think so many other things are going to be right. And I'm sorry, I may be very radical in some of the suggestions I'm going to make. I think we need to have a look at this point and have conversations around them on how Nigeria is going to be a sustainable country on its own. I think this COVID-19, we know, yes, it's a pandemic and it has all its negativities. I want us to shut down these negativities and focus on the positive aspects of what do we take out of this COVID-19. And the first thing I want to talk about is the automation of our tax system. We've been struggling with automating tax system over the years. But because we have alternative, the alternative is just for me to walk down, enter my car, and then go to the tax office and meet the tax officials and sort my problem. So I leave the technology alone. But we know that in advanced environments, from the comfort of anywhere you are in the world, you can file your tax returns, you do assessment yourself, you file your tax returns, you make payment of your taxes, you get maybe 1 or 2 questions if there is need from the tax officials, and you respond online. In most cases, in most countries, taxpayers do not know where the tax offices are. And I think this is going to reduce the cost of operations in the sense that we can do things online without necessarily having to be inventing hours going up and down. So I don't really think we should go back. We should rather move forward. It might be a bit difficult to say, sorry, now we want all tax returns to be done online. And so I do not see a free time for any tax authority right now. I honestly do not see any free time for the Federal Inland Revenue Service staff. This is a time to rearrange them. This is a time to organize this kind of training, webinar training on technology. And then also, I know FRS has, customer manager or taxpayers manager group. This is the time to automate those procedures at the FRS level and also extend that to taxpayers training so that both the tax officials and then the taxpayers, we can all be on technology. For instance, in some of the African countries, you don't have to go to tax office before you do anything. South Africa here, right in Nigeria here, you access your tax account, you file your returns, you make your payment online, you keep all your documents. If there is any question or query sent to you, you respond, and you don't even need to know where the tax office is. So I think we need to move forward, very positively in the use of technology to make sure that we are now a technology country after this COVID-19. Now, the second point I want to raise is actually, which B also mentioned, is the issue of risk-based audits. I think this is high time for us, as we also know, in those advanced environments, the UK, the US, even in Africa, South Africa, you don't go for audits for a whole lot of things because everything is automated. So you have access to a whole lot of information. And so therefore, it's only in some very few cases you have to audit an individual. For instance, somebody is using Rolls-Royce or is having a private jet, like in the UK, for example, and he files his tax returns and he's saying his income is just £5,000 per annum. So the taxman is just going to flag it and then send him a letter for an audit or investigation. So you then find out that the percentage of people audited there is under 20%, if up to. So, and about 80% of them are not audited because you have access to the information, you do reasonability tests, and you see that, look, there's really nothing to, audit here. If somebody is using aircraft and then he's using Rolls-Royce and all those kind of things, and he's paying about £200,000 or £500,000, which audit are you doing? So you also do some reasonability tests and you do that. I think our FIRS and even the state authorities need to develop that more during this time. And the whole of this period is actually a training period for me. It is a whole lot of opportunity, online training like this webinar. And I think the authorities can actually, talk to the coordinator of this program for this online training, for us to do that. Another thing I think we need to address during this period of stay at home or reduced level of activities is our long list of taxes. Because we have a very long list of taxes that I will honestly be expecting the National Assembly to have a second look at. We have a lot of multiple taxes, and these are the time that, with all due respect, even what we are collecting taxes on, they are not things you can operate. We have some in which you will collect, taxpayers are going to pay income tax, they are going to pay infrastructure tax, they are going to pay haulage tax, they are going to pay road maintenance tax. So you have about 4 payments only on road. Now, don't ask me whether the road is there or road is not there. That's a different, subject matter entirely. What I'm saying is that we need to harmonize this tax. We all know some couple of years ago, when the Manufacturers Association of Nigeria, approached the government that a list of taxes of 39 is just too much. Look at some other countries. The number of taxes they collect is very few, yet they collect more than what we are collecting. Unfortunately, instead of reducing the 39 taxes to, I think, about 25 they were asking for to make it more manageable, the list of taxes, rose to 55 from 39. And this is quite embarrassing, to be very honest. We have a lot of earmarked taxes. How do you collect income tax to cover all these, expenses? And you say you are collecting, 30%. Whatever the rate is, we can debate it and say, okay, 30%, 2% is for infrastructure, 2% is for this, 2%. You can do all those kind of things. But to collect this and then also be assessing all those kind of things, I think this is high time for us to harmonize those taxes, reduce them, and then get the time we will be spending on tax to reduce. Because if you make it from the 55 taxes, it's just like about 15 taxes max or something. You will still collect probably more than all these small taxes that you have to be going up and down, be arguing each of them differently. So I think I'm not saying, this is the only solution, but we have to think around reducing the number of taxes and eliminating, multiple taxes. Another thing I want us to focus on is the help desk by the Federal Inland Revenue Service and then our various tax offices. The tax officials need to be trained a lot on providing support to taxpayers and also tax professionals, although I know professionals will be there to assist the taxpayers. However, the help desk of the Federal Inland Revenue Service and the various state internal revenue services should be stepped up right now. And everybody should be able to dial, a help desk line and then be able to complete your form online with online assistance. And you can do sharing, online, and then how you fill your form. all those kind of things, you know. So I think this is high time we also look at online help desk, you know, to support our tax practice. The other one I think is incentive, you know, and the incentive I am talking about here, I'm not talking about cash incentive, you know what. I'm really talking about how do we stimulate the economy using some robust thinking around incentives that can be provided. I know sometimes ago the federal government, you know, gave a company like Dangote to say, okay, you construct road from here to here, and it's you know, going to be allowable as deductible, you know, expenses and all those kind of things. These are the kind of arrangement that government needs to enter into. A lot of PPP needs to be done instead of going to borrow and then spend government money to go and be doing those things. Why don't we make the best use of the investors who have their money to put it there? And we can look at an agreement with them to say that, look, you're going to recover this thing over 15 years or over 20 years. Don't forget that they are spending the money in advance and we're just giving the relief subsequently. I think government needs to think more about, you know, all these kind of incentives and make sure that we are able to move the economy, you know, forward. If we are able to do that, government is going to be saving a very huge amount on interest payments, because it's not going to be the government fund that is going to be used for all this infrastructure development. The same thing is power. You give power to those who can really do it, and then make sure power is you know, available. Let me sound a very note of warning here, because I know the major challenge we have in Nigeria with the PPP is really the sanctity of contracts. You know, one government enter into a contract now, another government comes and say, no, 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 no. I think we should have a standing committee somehow of the ministry on this project. And I will give an example of the Nigerian NLNG project. If NLNG was not given 10 years tax holiday, probably they would have done it in another country. And what would have happened in Nigeria? We won't be having that project here. So I don't really think 10 years is actually that long to be able to give incentives and make sure that we are able to, you know, stimulate our economy. So I think this is the time to sit down robustly and see what do we award, and then how do we make sure that such an award is sacrosanct. So we just have to respect the sanctity of contract, you know, to make sure that the country is moved forward. Yeah, as much as I know that this might be a challenging thing, the key thing is for the government to avoid, you know, interest-based, of which the little resources available that the government can spend for development, you know, will then go into interest. Another thing is that I think this is a very huge opportunity time for Nigeria also to diversify the economy from oil. For instance, if we look at cities like Dubai, Dubai is also an oil city, for example. But if we look at their GDP, the contribution of oil to Dubai GDP is in the region of 5%. So this is the high time when NITDA is going to take Nigeria to a higher level of income other than the oil. Yeah, invariably the oil price, you know, we know what it is now. And so this is a very huge opportunity for us. Even when the price goes up going forward, then we should invest such oil revenue in capital development, as well as also invest in some other foreign stock for us to get some profit share from those arrangements. So basically, these are the kind of things that I'm looking forward to. That's why I said there is a very robust, pragmatic steps that I think the executive needs to take for us to move forward. Standardization of processes and procedures is something that we also need to look at, and that's going to eliminate a whole lot of cost, you know, in doing business. Now, the second arm is the legislative arm, which B also actually mentioned, and yes, thanks very much to various tax authorities for the publications that have been given. But to be very honest, I have concern with those publications. Once I read them once, I will say it's okay. Because we are here, when some reliefs were given based on presidential order, when there was challenges, and then everybody filed some things like VAID, for example, filed VAID, and then under the VAID, no penalty, no interest, no tax audit, no tax investigation, all those kind of things were there, isn't it? But that was when the government need money and everybody rushed in. I mean, with due respect, at that time, I had suspicion that the government is now under pressure. But when the pressure is over, then they will come back and say, sorry, that doesn't mean that we will not do audit. And this is exactly what we were seeing. We did protested, a whole lot of these things that, look, government should be able to go by its words. And thank God, I know we have a lot of very reasonable people, within the FRS then and said, yeah, okay. But it shouldn't have happened at all, because it's going to amount to waste of time as somebody traveling from Lagos to Abuja to go and negotiate why you shouldn't be audited, you shouldn't be investigated, because you've packaged everything. You've already submitted them, to the Federal Inland Revenue Service. So what am I saying here is that the legislature, they will need to help stimulate the economy by making sure we are not wasting time. So all those circulars, public notices, probably needs to be legislated. And I think be it mentioned that it has not been, signed into law. So this is a very huge opportunity to assemble all those circulars, especially at the Joint Tax Board level. And let's see what comes into the stimuli package, the law, the Economic Emergency Stimuli Bill of 2020. Let's see what goes in there. Let all states put in their stimulus there, and then let's be legislated. It's only when it is law that everybody will go to sleep. But when it is a publication, and somebody can just wake up and say, sorry, as at that time, the chairman was just over generous, and, so we start arguing. At the end of the day, we may still agree that, okay, no, you cannot audit, you cannot collect penalty, you cannot, because it was COVID-19 time, but we will have saved time, because time is money. So we need to look at that legislative role and make sure that we cover this. And the next one are the judiciary. I did mention at the beginning, the judiciary actually plays a very good role in asking people to go and settle out of court. To be very honest, in my honest view, I think this is the time the Federal Inland Revenue Service and so many state authorities need to call taxpayers and say, guys, let's sit down. Because if you are able to agree, instead of you asking for, say, for example, 1 billion, and somebody is saying, oh, what I can pay now is 200 million, and let's close this case. For me, I think it will be a very good thing. Because if you keep on dragging from the tax appeal tribunal, they appeal again, go to Federal High Court. Of course, 8 years will have gone, because you still go to Court of Appeal, go to Supreme Court. But if we agree and we collect what is collectible, we look at the areas that are areas of controversy and improve on the law. That is where legislative dynamism comes in. The government will have collected the money now, and that will have been also like a palliative to the government. We close the cases and everybody move on. So I think this is a high time when, as a matter of policy, we look at, something like out of court settlement to make sure that there is a very huge revenue coming to both the federal and then the state government to be able to run the government. Then the next one is the taxpayers. Again, the taxpayers, this is the high time when the taxpayers need to review, their operations. And I absolutely agree with everything that B earlier said, in terms of how they actually automate, their system. So the first thing I have here is the use of technology, as much as possible to deliver, services to people. Taxpayer also needs to be very frugal at this time, cut down on certain expenditures that you don't really need, as at this time, and step up on investment. We should also develop the right attitude, especially about tax planning, and all those kind of things, so that you don't end up paying penalties, at the end of the day. I also recommend to taxpayers to be very honest with the government stimuli, because the reason why government do not have so much trust in taxpayers is probably when they see one or two people trying to, play hanky-panky, and then they start suspecting every other person. So it's high time taxpayers learn the right attitude to life and then to do things rightly. And I think that's going to be very, very helpful. And this is also the time for various taxpayers to have a look at their, portfolio, and then renegotiate all these interests. That is definitely going to take so many, taxpayers out of the radar if they are not renegotiated at this point. And they have to look at the force majeure clauses and then discuss at this time on a win-win situation, so that everybody, can survive. Most of the things, as I said, we could do online through Zoom like this, through Google, Microsoft Team, and all the rest. And then I think taxpayers needs to be looking, at that in terms of process mapping for their business. And finally, is we, the tax professionals. I want to say that this time is a very huge opportunity for tax professionals from 3 areas. The first one is automating our system. We need to automate our practices. So we can see now that we can do almost everything, online, including getting the financial statements, getting the trial balance, getting everything, preparing what you need to prepare to support your clients. And then online, you can file the returns. So I think we need to invest more on technology by almost everybody adopting a tax tech, at this time. And I believe it's going to be very, very rewarding. The next thing is also standardization of our products, because this has to do with fintech approach. We need to standardize our practice and then find a way of getting paid for that, make life easier for the taxpayers. And I think that's something we need to be looking at. And finally, we also need to be looking at support to SMEs, as well as support to the various arms of government in all these things. So providing tax support, just as B said on tax planning, to make sure that your planning is within the provision of law on account of tax morality. Please, let us avoid aggressive tax planning, because if you do aggressive tax planning and the authorities disagree with you, you still go back to argument and all the rest of it. At the end of the day, when you agree, you pay more. So I think tax planning should be within tax morality, scope of which the authority is ordinarily going to accept. And then we can all move positively, towards achieving economic stimuli at the end of the day. Just to recap, everything.
Well, we allow you to recap later, my boss.
Yes.
We allow you to recap later. I have a number of questions for you, and I want us to quickly touch on those.
Very good. Please go ahead. Thank you very much.
Specifically, your people are mentioning your name, so I need to also let you know. Aziz, my boss, how will you respond to this mind of one of the past presidents of Charities of Organization of Nigeria, the person of Gabriel Fashoto? Listen to what he said. He said, at this period, the tax solution should be that a tax consultant should engage revenue collectors, that is FRS and all other states counterparts, concerning the peculiarity of their claims vis-a-vis the controversial provision of tax law. That is not the end of it. He said, ironically, some of us have the kind of view that these tax authorities are infallible. But he said, however, tax consultants should just constantly engage them on technical issues which can possibly be resolved prior to their application to the client. So if you get what I'm trying to say, is saying one of the solutions is that we call ourselves tax consultants, we should constantly engage tax authorities. So in just 30 seconds, what's your view about what past President Fashoto said?
Absolutely. I absolutely agree with past President Gash Fasoto on this matter. And that's part of what I mean by engagement around out-of-court, settlement. Because most of the issues that we have, taxpayers have disagreements with the tax authorities. And then where tax professionals are trying to engage the authorities. If the authority keep on maintaining a very hard stance, against some of these issues, we will not really move forward. But we can do a win-win situation. And this is where I absolutely agree with our past president, Gash Fasoto. Now, for example, I remember when we had an issue, let me give just only one example, and that's the issue of demurrage, for example. And we are saying that demurrage is actually a shipping cost, really not a penalty, for instance, and authorities feel differently that demurrage should be disallowed and all this kind of. We can sit down and look at the fact of the matter, because what is disallowable in tax law is penalty imposed by a government and payable to a government. So is demurrage imposed by government where government is not the ship owner? Of course not. So we can agree among ourselves and look at if there's any amount payable. So there is nothing like robust engagement. And that's what I mean by robust engagement. A lot of the cases in court, they are matters we can sit down as professionals. The tax authorities can bring tax professionals and say, please sit with us. And then also the taxpayer also bring tax professionals. And then we sit down and we resolve the matter. If there are any area we believe the tax authority is correct, let us revise the tax and say, please, let's pay this one. And then this one, as a matter of fact and law, we honestly believe this is not payable. And then authorities will also have a look at it and say, okay, then so it's going to be a win-win situation and everybody is going to happy, with it. So I absolutely agree with the past president on robust engagement with the tax authorities to resolve.
Thank you, Aziz. You are not going anywhere because Dr. Titi Fowokon is also asking me to ask you specifically that given the COVID-19 palliative waiver of interest and penalty on this ongoing tax audit and desk examination, especially the tax investigation, what is the implication of this on matter before TAT? Especially that TATs, they are not meeting currently because of COVID. So please, I want you to answer this within 1 minute, please.
Okay, actually one can file additional pleading that based on this COVID-19, where even a tax liability, sorry, let me take a step back. The first thing is that where it is decided that the taxpayer actually needs to pay additional tax. Usually the taxpayer should be given 30 days within which to pay, and then there shouldn't be penalty and interest at all. However, where the court is of the opinion that, okay, penalty and interest should be paid, then the taxpayer can make a case to say, look, during this COVID-19 period, this is not the right time to be charging penalty and interest. But to be very honest, the COVID-19 issue is actually, these are current issues, not the old issue for which there are disagreements. So unless a very strong case is made to the court, and then the tribunal or the court, and for them to see that this is the time that we need to support ourselves, also as part of settlement, then I honestly believe they should waive those penalties and interest. This is my view to Dr. Titi Fowokon.
Thank you. One more before I will open the line for all the panelists. Yesterday, I came across between hotel owners and Attorney General of Federation as first respondent and the Minister of Finance as second respondent. The fact of the case is that Minister of Finance will not have power to amend the taxes and approved list for collection, because the law and the Constitution is very clear as to the responsibility of the legislature according to Section 4. And in relation to Section 1, subsection 2 of Nigerian Constitution, that look as if is inconsistent, and you know as a lawyer that part that is making Minister of Finance to tamper with the law is inconsistent, and in the mind of the judge, he agree with the plaintiff that they cannot. This judge will not create problem in the tax system. I wouldn't know whether you've seen the answer.
Okay, yes. Thanks very much. Yeah, thanks very much. I think we need to understand, one thing, that the Minister of Finance, with all due respect, do not actually have any power whatsoever to make any law. What the Minister of Finance needs to do is only to collate the list of laws that have been validly passed by the House of Assemblies and the National Assembly. That's all the minister is doing. So if the minister is including on the list, items that is not being passed by either National Assembly or the House of Assembly, that will be invalid. So I absolutely agree with the judge if that is not there. The second thing is that if she mistakenly, now honest mistake, include a wrong law that was passed by either National Assembly or House of Assembly on the list, that law will be invalid. And I can give an example. There has been a debate, an argument as to whether VAT is supposed to be a federal law or is supposed to be a state law, and you have conflicting judgments here and there, So let's assume that VAT is already been enacted on by the National Assembly, and under the doctrine of covering the field, we take that to be a national law. Now, if any House of Assembly enacts another law that is a duplication of that law, and the minister, in all honesty, just pick that law and put it on the list, then it's going to be controversial. She hasn't done anything wrong because the law was passed by the House of Assembly. And that is where I talk about the legislative dynamism. At this time, there must be discussion around what the state authorities are going to enact, what the federal are going to enact, and we need to streamline it to avoid the conflict. But to the extent that the minister is only compiling the list, then it's going to be difficult to say that she has done what is wrong. However, where she has included a law that is invalid, then of course the law is going to be invalid. And that is where I will agree with the judge that any item on the list is invalid. For instance, I also mentioned to you about all this multiplicity of taxes. The minister compiled the list and included, of course, we have income tax on the list enacted by the federal in line with the Constitution and the exclusive legislative list. But again, you have state government doing infrastructure law, you have haulage law, you have road maintenance law. If we may ask, you can go to court and ask the court, sorry, all these laws are duplication of the income tax law, because we pay income tax because we use the road. So we cannot be made to pay infrastructure tax. And then we cannot be made to pay haulage tax because it's also in respect of the same road. Again, we also pay road tax. So all these things, if the minister put it on the list, they will all be invalid if you go and challenge it in court.
Thank you, Aziz, and it's been wonderful to listen to you. We agree with me that we've moved the frontier of knowledge in taxation forward this morning. I want to open the mic for two of you, and the first person I want to ask question, because we have like 10 minutes to round up everything. B, thank you for staying by. I can understand that Aziz was just trying to pull your leg, that you've said everything. You could also see that he has given us more to support what you have said. Thank you so much for staying by. Now, how will you react to this question that tax palliative, can it ensure job security? This was by one Abiodun Adeyemi. Can tax palliative ensure job security?
Thank you. I would have hoped my answer to that would be yes, but unfortunately, probably would be no. Tax is only one factor in running a business. There are loads of other factors. For instance, if you don't have demand for your product or for your business, no matter what tax palliatives are given, you can't keep your business, you can't keep your. So there are loads of other factors. If you don't have healthy employees, there's no way your business can run. So tax is just one way of easing the financial side of the business, but there are other areas.
Yeah. Oh, thank you. Okay, let me give you a kind of follow-up question. One of our participants here, Dauda, he wanted to know whether these donations, individual and corporate, will be tax deductible. Bearing in mind that Minister of Finance was saying 100%. So what's your mind? Let's know your mind.
So I think if I recall, essentially in terms of donations, for donations to be deductible, they have to be for to approved organizations that have been approved for to receive those donations, and that's why a lot of times companies that want to actually have a want to give donations or want to actually set up an NGO separately to such that then they can funnel their donations through that NGO, so it will be deductible for the company, and then the NGO is approved to do what it says. Now, it's odd. The law itself says, you know, anything that's done as a of the charitable nature and whatnot should be permitted. But I think the court ruled recently that it has to actually, following the IFRS's pronouncement, that it should be an approved entity for that purpose. So yes, so I think that's, hopefully that answers that question.
Okay, thank you, B. I wanted Aziz to have a kind of sip of water within this period. So I want to do a kind of follow-up question why I move to Aziz later. Somebody here also wants to know, Christopher, wants to know if this circular by FRS that states that penalty and interest shall be applied when you revise your annual audited financial statement. Let me rephrase. There's a circular by Federal Land Revenue Service that when you revise your audited accounts or annual financial statements, you revise and send to them, there will be penalty to that. I've not seen that, but I want to know whether you have anything to say about that.
Yeah, I haven't seen that myself, but just reflect on that for a second. So penalty and interest comes from underpayment or underpayment of taxes. So the question is, just because you revised your financial statement doesn't necessarily mean you have underpaid your taxes. Some of the reasons why you may revise your financial statement is because to account for your taxes properly, because you've already done, that's why you have a tax to return adjustment. So essentially, a lot of times what happens is when you've done your audited financial statement before you've actually filed your tax returns, so then you revise it for that purpose. So generally speaking, you shouldn't get interest and penalties applying just because you've revised your financial statement. But it can happen if what you've done is you understated your income before, both for your prior financial statement and your tax return, and then you reclassify that in a new financial statement, then yes, interest and penalties could apply on that.
Okay, one more for you before you go.
Thank you.
You know this concept of refund by tax authority, especially with regard to withholding tax and VAT. As someone, Godwin, want to know whether you think in your mind that tax authority will be favorably disposed to this.
Yes, and I mentioned that earlier. I know for a fact, and we've had many instances where we've actually received significant money and cash from the FIRS in terms of refunds for withholding tax and also for VAT. Now, the point is you need to have your house in order. It's just like any transaction. If you're going to go to someone and say they owe you money, they will first want to check to make sure you don't owe them money. So what does that mean? That means they will come and do an audit. So they'll come and audit you to make sure you're not owing them. And sometimes if you've already been audited, then we try to push back on that and say, listen, we've already been audited, only maybe years have not been audited. Sometimes they listen, sometimes they do not, and say this is a special audit and they need to go through it. But so what we normally advise is what we call a health check. So if you're going to do a VAT refund or withholding tax refund, we would advise doing a health check first, because you don't want a situation where you go for a refund for 100 million when you actually owe 200 million, for instance, that they have. So our advice is, yes, it's valid, but we need to prepare for the audit. Thank you.
Government for implementation of 50% refund of pay. What do you think will be modality? What's your advice? We want to believe that tax authorities are also on this platform. Generally, take your time, like 2 minutes. Advice. What modality do you think government should put in place to implement this issue of 50% refund of pay, since all we know that pay is remitted to states? Is this something they should venture into? Thank you.
Sorry,
Aziz.
this question, I
Aziz.
wasn't sure because I didn't hear the beginning. Yeah,
the question is actually for Aziz.
The question.
Majority of participants
you need to repeat the question.
This question.
Can you come over again on that, Prof? I couldn't hear the earlier part of. I only had 50%.
Okay. What we are. The question is that. Okay, participants want to know the modality government has put in place for effective implementation of 50% refund of payee, since we all know that payee is remitted to states. Do you get that?
Yes. I got that. I think that's going to be on a one-on-one basis with the different tax authorities. If truly the state internal revenue services or the state government did agree to that. And the way to do that is when the 50% that is going to be refunded is determined, then probably it's going to be like a right of set-off from the tax that is payable. Or they discount it, and then instead of paying 100, then they ask you to pay 50, and then you move on. And those are the kind of things I was saying there might be need for, legislative backing, because some few years down the line, it might really not be sustainable just to use a public notice or whatever to waive 50%, of PAYE, because that is very strange to the Personal Income Tax Act and then the Amendment Act of 2011.
Okay, thank you for that. Can you also quickly educate us, because everybody, virtually almost 50% of questions I have here, borders on the issue of multiplicity of taxes. And there's someone was asking, how can tax authority ensure corrupt people actually pay tax? bearing in mind that there's something called predication, and if there's no predication, you may not be able to venture into it. Without preempting your response on this, what is your advice concerning the so-called corrupt people? You know, you cannot pronounce anybody corrupt unless caught to do so. But can you just take us through this?
That's right.
This one.
That's right. Thanks very much. You see, the issue of tracking corrupt people is the work of the chief executive of all the tax offices. As one of the MD of a bank, one of the presentations in the past said that I'm not saying anybody should not plan to do fraud in my bank, but my own job actually to track the fraud down and then to ensure that he's not able to get away with it. So, and one of the things we've discussed, if most of the things are to technology based, and then you can really audit process, it's going to be a bit difficult payment of tax. And so it is the work of the chief executives, and I mean the chairman of the Internal Revenue Services, in designing a procedure, you know, to make sure that all these things are tracked down, especially at this time of the COVID-19 pandemic break. And that's part of the things I refer to the Joint Tax Board. There must be a way, a harmonized way of working together to make sure that everybody pays taxes, you know, correctly, and they are unable to get away with their corruption. I think that's the job of some people to do.
Thank you so much, Mr. Aziz Alatoye. And B, we want to say very big thank you to you. But it will be out of sync for me to allow you, two of you, to go without asking you to just in one minute, because I have just 3 minutes more now to round up this. I want you to, in 1 minute each, just recap. What do you want us to know? 60 seconds. I'll start with B.
All right. Thank you very much. Thank you again for having me. Just to quickly recap, just basically what I think we need to take, what I would like you to take from this webinar is, one, there are some incentives there for companies that are struggling, and we need to make sure we take advantage of those COVID-19 specific incentives. But we need to also ensure, I think for us, that listen, they're not very deep, so we need to look and try to ensure we're as efficient as possible. We need to have a plan for taxes for our businesses and even our personal things. So you need to set out a plan and say, listen, I don't want to pay taxes more than at this level, and set out a plan on trying to achieve that. And obviously you need help as much as you can. And there are people like myself and Aziz to assist you as needed. All right, thank you.
Thank you so much. Can Aziz now recap?
All right, thanks very much, Prof. I think the summary of what I will say is that when the going gets tough, the tough actually gets going. So this is not a period of negativities, but a period of positive thinking. So I think we should actually think out of the box, and then make sure that we are able to identify as much opportunities that this lockdown, COVID-19, offers us, and then be able to capitalize on that and come out stronger and better as a nation, as an individual, or as a group of people. And this is going to be my takeaway, gift here. Thank you very much, Prof.
Thank you so much. I did promise us that I will tell us what Joint Mind is all about, but I will do that especially after the chairman of council of Joint Mind must have thanked all of you and say one or two things. So on this note, I want to appreciate two of you, but it is the place of our chairman to actually talk to all of us now within the next 1 minute. Toby Abiola, please, you are welcome.
Oh, thank you very much, moderator Godwin Oyedokun, FCFCTI, for agreeing to moderate this program. Also, I want to thank our resource persons. First, I want to thank Mr. Alaji Aziz Alatoye, FCFCTI, Senior Partner Ascension, for agreeing to come and share his experience with us at this forum. Thank you very much, sir. Also, I want to thank my new friend, Mr. Akibi Abudu, MSCCPA, Tax Lead West Africa, S.I. Young, for agreeing to come and share his thoughts from the international perspectives to us. I want to believe all our guests have enjoyed the program and they have taken one or two things away. I want to believe that also FRS has noted some points there, likewise the Federal Ministry of Finance. And I want to believe that Nigeria will get better and stand stronger as a result of this pandemic. We will not be looking at the negative sides alone, we should look at the positive sides too. It will be better for Nigeria because it now teaches us new ways of doing business. I want to thank you once again, gentlemen, for the time. Have a lovely time. We'll see you next month with another webinar. Thank you and God bless you all. Thanks. Bye.
All right.
Thank you.
Thanks.
That was Toby Abiola, a deputy director in Federal Land Revenue Service. I have just 1 more minute to go, but within this 1 minute, I'd like to let you know much about Joint Mind, and quickly permit me to go through what I have. Joint Mind Club was founded in June 1990 with a focus on academic, social, and professional excellence. The aim and objective of Joint Mind International as follows. One is to contribute to the development of accountancy department of schools, welfare of accountancy students, both within and outside campus. Another one is to foster the spirit of self-help, unity, and cooperation among its members. Another one is to inculcate in members the virtue of leadership, discipline, sense of maturity, personal integrity, and responsibility, to develop the socio-political instincts of its member with a view of preparing them for challenges ahead. And again, to train, develop, and sharpen the economic and business intellect of its member, to separately or jointly venture into business world in the near future. I can confirm to you that this is what we've been doing over 30 years. I joined when it was necessary. And the council is also considering some of our other people to come in one angle or the other as member. This we will send to all members. We want to say thank you once again, and we can never thank you enough. Distinguished panelists and all our participants, without you here, we will not be here. And this shall continue. We will not be tired to continue to educate members. Thank you, and God bless you all. Bye for now.
Thank you very much. Stay very safe and have a very nice day.
Thank you.
Thank you.
Thank you all. Thank you. Thank you. Thank you. Thank you. Thank you.